Greetings, Algo Artisans. It's Cowboy Friday the 3rd, and we're going to go through charts today, Bitcoin, gold, and the JPY. These all have ramifications, so let's get into it right now. All right, so we're looking at Bitcoin right now, and this was a nice move today. The move went ahead and put Bitcoin back into its higher liquidity zone. Bitcoin is back into this higher consolidation, and that's actually really good news. I did not think it would go there, and I didn't bet heavy either way. I was kind of waiting for price to make a move into or out of this area, and now it does look as if it has made a decision, and that decision is bullish. This could be that we've seen the bottom, right? So just to briefly review the history, we have Bitcoin headed up. It rotated between about 61,000 and 72,000 for a couple months, and then it actually broke downwards back at the very end of April. I actually called this move and I traded it and I took a nice short. I think I actually shorted Solana and Bitcoin and won those. Now it did head down to this 56,000 level. These red marks that you see are liquidity. So we're going to review that liquidity using the Kingfisher very shortly. However, the fact that Bitcoin has returned to this area, this large rectangle, this months-long consolidation is sort of it's not a confirmation of any kind, but it means that there's a good chance that Bitcoin might actually range up here and be ready to go back up after a number of days or weeks, whatever it might be. Now, nothing is guaranteed. We will review this. Let's go ahead and start with the Kingfisher to review the liquidity and make sure that all these lines are appropriate. Okay, so we got a lot of liquidity sitting at 58,800, 58,800. That's a lot. That's the most liquidity on the chart, and it does appear that this really has built up ever since price moved up. A lot of people went long. So now we do have liquidity to the upside. We got 62.3, 63.4, 64.3, 65.3. So a lot of kind of different little nodes here between 62.5 and really up to about 65.3. So it looks like this liquidity has condensed a bit. So we're going to go ahead and inch this down. And I would say there's just basically a block of liquidity above price. I wouldn't worry too much about the individual nodes unless I was trading super low time frame. And then to the downside, again, we have that very large bit of liquidity. A lot of people went long and they have their stop losses sitting at 58.7. And that does make a lot of sense here because this 58.7, if we zoom in, it's right below where Bitcoin actually came up, tried to head back down and rejected hard to the upside. So a lot of people went long with their stops just below that big bull candle. Now, this is not exactly a trade I would take. If I were going long, I probably would actually have my stops below this lower structure because there's a really good chance with that amount of liquidity, price may grab that before it heads back up. However, a lot of people are probably confident that this 60,000, 61,000 is going to be protected, right? So we saw a price back here in March and in April try to go down 4 different times and get protected very strongly where this box is right here. So I imagine a lot of people are still betting on that protection and thinking the price will go up, and it may very well. So a lot of downside targets, but I'm not going to worry about them right now, the downside liquidity areas. I'm just going to focus on this very large node that's right here. And perhaps I think there's a little bit more, actually it's around 55. So we'll go ahead and put a mark right there, even though it's not very strong. Okay, so at this point though, in the algos, Bitcoin is definitely short-term bullish on the daily, and I know on the weekly it was bearish and it's been bearish, but that can flip at any time. So let's take a look what the weekly says. Yeah, weekly is still a bit bearish. If we take a look at the algos themselves, the indicators on the bottom, so I'm not quite convinced that price is ready to just completely rally up and break the all-time highs just yet. But if we do see price stay up in this low 60s and not break below 61,000, eventually that weekly should go ahead and get bullish once again. So this will be a matter of can it range and stay above 6,100 or not. If it dips below, then we might see price actually revert and go back down, and that could very well happen. A lot of liquidity at 58. So if things did flip over on the daily, then we would probably see price go back down there. But as of now, I don't see that happening. Not just yet. I think it would be at least another day or two before that happened, and by then it might be that liquidity is gone. So for now, I would say price is probably going to reach up and grab 62, maybe even 64 and 65 before the weekend is out. Or the weekends can be slow. It might take a few extra days, Monday or Tuesday. But for now, I would expect price to want to reach up and grab liquidity up to and including maybe 65.5. So that's Bitcoin. Take a brief look at gold. Now, gold does appear to be forming what's called a falling wedge, which is actually bullish. And gold is overall bullish and has been for some time, ever since it broke out from its multi-year highs above 2175. But in the end, this is a a bullish look. These tend to break upwards, although when they break upwards, they may not go any higher than the structure inside of these, right? So these wedges tend to have these limits right about here and there. So price, I imagine if price coils up and stays within this wedge, at some point it's probably going to break up. And gold has been really interesting. Of course, when the Middle East popped off, we have Israel and Iran having some conflict. Gold really started to head up, and really it was Israel and Hamas, and now of course there's Iran and so on and so forth, right? Price could really bounce up and grab any of these numbers at any time, but to look at it from a kind of a higher time frame standpoint, now we're going back to 2018 here looking at this. So these targets are some pretty high time frame stuff, and I'm using a Fibonacci extension. This is a great tool. In fact, I called out the first Fibonacci extension target, which I will mark on the screen right now. I called that out months ago, and then the next one is going to be up at 26 or so, 2650. So there's a really good chance that we see gold go ahead and it might just go straight up there. The kind of moves that it makes after a long consolidation, they're like that, right? So you did have price not move from 2020 up until 2024. Not really. It stayed within this area right there. So you had basically a 4-year consolidation, really, at least 3 years. And as price broke out, that amount of energy built up for all that time. The longer it ranges, the longer it breaks out. You have an example back here. Price range from 2013 to 2019. That's a 6-year range. And then when it broke out, it moved from 1400 all the way up to 2100, right? So now we're looking at a similar amount of time, and there might be a similar reaction. Plus, the entire paradigm of the world is shifting. Gold actually may end up being used by some bankers. I've done some shows on this, but gold was actually moved from tier 3 asset by the BIS to a tier 1 asset. So all the central bankers of the world are now able to account gold 100% towards their balance sheets, when before, in 2017, before that rule was changed, gold was a tier 3. It was 50% of the balance sheet. And prior to that rule being changed, a bunch of central banks went ahead and bought gold. So somebody knew something, right? So gold has become more important from in every aspect, in every way, not just in what might happen in the future, but from balance sheets and everything. So gold's really something that I'm going to keep an eye on here. And the JPY is important. We've been talking about it, so I don't need to go over it extensively, but let's just review what happened in the charts. And this is another long-term paradigm that has changed. We had what is called a bullish ascending triangle, and it did play out. And this is on a multi-year time frame. This is going back to really October 2022. Long story short, the Japanese yen had an important place when it comes to the entire world equities market, right? So, U.S. equities, so on and so forth, bond market, basically a liquidity source. And the Japanese are now changing their stance on what they're going to do as far as printing their currency. And there seems to be a currency war. Now, what you're looking at is a monthly chart, right? So each one of these candles is a month's worth of price action. Yen was being protected over and over at about 152. A number of times price was rejected. The Japanese appeared to protect their currency at that time, and it ruptured and broke upwards. Well, now the Japanese yen has actually gone up, right? So when this goes down, that means the Japanese yen is going up, because this is the dollar versus the yen, dollar in terms of yen. So even though the chart is going up, that actually means the Japanese yen is getting weaker. If we go to a daily chart, we actually see how remarkable this move back down was. The Japanese yen broke out and took from Tuesday, April 9th, all the way until 20th of April. So a whole month it took to top out. And then in a matter of about a week, price headed back down, all the way back down to where it started. So you had a very, very strong push down. We're going to see, I imagine, that the Japanese want to protect their currency. I don't know what they want to do, but I'm pretty sure that's what's going on here. In fact, there are a lot of people who, much smarter than me, have that theory as well. So I'd imagine they're going to try to push it back below 152. Now, they may or may not do that, and it's going to be tough to do because there's a lot of liquidity right there. So, and it might be also that the people who are trying to push the U.S. against Japanese yen up much higher, they may also be fighting right now. This may become a bit of a currency war, which that's actually rather dangerous. Shooting wars can happen because of currency wars. So, we all got to kind of keep our heads in a swivel. But for now, what I think we might see at least is either a break downwards, which would be, obviously a stronger Japanese yen, or we might see a bit of a range until things get decided. But the move down here was momentous. I took several trades on the way down here. It was fish in a barrel. $100 here, $100 there, doing it several times a day. It was beautiful. So these kind of moments when you have this type of action can be very advantageous if you can trade algorithmically. And if you want to learn how to do that, you come over to algofactory.tech. Now what we do is we teach people how to build their own trading method. And technically that's an algorithm. You don't have to know how to computer code. You don't have to build an auto trader. But if you want to build an auto trader, we can put you on that path. path. However, we will teach you the basics of the market and the basics of building a trading plan and to help you execute it so you have the ability, should you be successful, to extract money out of the market. I'm going to go ahead and throw up a testimony really quick, so go ahead and have a listen to that.
This is Think Free's Algo Factory testimonial. I began my prescription for Algo Factory the summer of 2023. I am now 70 years old and I have set a goal to have a supplementary income by learning to trade. I have been putting in about 3 to 4 hours per week of study time. In spite of this small time of commitment, I am determined to learn to trade. I set a goal of slow, steady progress in my learning. It is now March of 2024, and I have been delighted that through the articulate speech and hands-on help and support from Cowboy, I have developed an algo that looks very promising. I've come to appreciate Cowboy's remarkable ability to communicate and teach. He's not just knowledgeable, but also very creative in his shoot-from-the-hips approach. I wonder, is that where the name Cowboy came from? I have followed the Algo Cowboy and V the Guerrilla Economist for more than 3 years and have found them to be very respectful, caring, and firmly rooted in reality. By that I mean they have a clear, deep, no-nonsense understanding of the world we live in, not just in trading and economics, but geopolitically and, dare I say, spiritually as well. For me, this fact makes working with them all the more gratifying and secure. This has and continues to be a great investment of my time and money. Also ends up being fun with the humor that is shared amongst our Algo Factory group members. Thank you, Cowboy.
Okay, thanks for listening to that. AlgoFactory.tech. Don't forget, trade your job, upgrade your life. We'll see you on the next one.